Welcome, Nick Heath here from U Asset Management, and I am delighted to talk you through our Q1 2023 investment review. And I'm joined on the sofa by our Chief Investment Officer, Mr. Shane Balkham. Welcome to you, Shane.
Hi Nick, welcome everyone.
So let's get straight into it. Shane, perhaps you could just talk our viewers through what happened in investment markets and economies in 2023 so far.
Yeah, good question. 2023 continued on from 2022 really. The main issue at hand was high inflation. Although it's coming down, central banks and policymakers are still working towards bringing it down to a more manageable level. We've seen the peak in the US back in June. That's coming down quite nicely. UK also peaked last year, October. It's been a little bit more stubborn. We saw a tick up from January to February, mainly down to quite robust food prices, but everything is trending downwards, which is quite nicely. What we also saw in the first quarter of this year is potentially the first sign of some unintended consequences from this interest rate rising cycle. In the US, we saw a few failures of US banks. Silicon Valley Bank, Signature Bank, First Republic tend to be symptoms of raising interest rates too much, too quickly, and it catches out those institutions that arguably probably didn't have strong enough balance sheets or some mismanagement of risk. We don't think it's going to be a repeat of 2008 and the global financial crisis, but it's just a sign of getting towards the end, I think, of this interest rate rising cycle.
Okay, so on that note, specifically on interest rates, I'm sure many of our viewers are kind of thinking, how high are they going to go? Or in fact, if we're talking as we are about them perhaps coming off, over a period, is there a steer from, say, the UK or where interest rates might be in 18 months or 2-3 years' time?
Yeah, good question. The Bank of England don't necessarily give out sort of hard and fast where they want interest rates to be, or they think the path is going to be. They have their amazing fantail charts that give a huge range of vast probabilities.
It's going to be somewhere between there and
Absolutely.
there. Yeah, okay.
I think what they're looking for, and the same in the US, is somewhere around about 2.5%.
Okay.
So steady, real return of interest rates. I don't think we're going to go back to a zero rate environment. I think that sort of Pandora's box is only going to be opened again when we hit, a huge issue, whether that be God forbid, another pandemic or another crisis or whatever. I think we're going to be looking to get to a normalized level of interest rates. For the US, they more handily have the dot plots, where every member of the Federal Open Market Committee give a prediction where they think interest rates are going to be at the end of this year, end of 24, 25, and over the longer term. And that sort of shows, and this was done before the banking crisis, that sort of shows maybe another couple of interest rate rises this year, maybe a plateau off, but no cuts until 2024. The banking turmoil has sort of sped that through, where what interest rates are trying to do is sort of tighten monetary conditions, tighten economic activity to slow down demand, to then obviously slow down inflation. So what the banking crisis in the US has done and sort of reverberated around a little bit around the world is tighten conditions that potentially means the central banks don't have to raise as many rates as they thought. And actually expectations now are for interest rate cuts to happen this year rather than the next year, as we move from inflation being public enemy number one to financial stability and maybe engaging a little bit more of an economic activity going forward.
Well, we definitely like the word financial stability, don't we?
Yes.
That's always a good and comfortable term to be dealing with. And of course, viewers will probably know that Shane and the investment team, not only are they obviously looking after your portfolios on a day-to-day basis, as any good investment team would, but on a formal basis, we have the Investment and Asset Allocation Committee. And of course, you met last week, Shane.
Yes.
I just wondered if you could share with the viewers, in 2022, coming into Q1 2023, how were portfolios positioned for clients?
Yeah, good question. We really haven't changed too much. Our ethos of having appropriately diversified portfolios, long-term views permeates through everything. We feel we're in a very good place for 2022, although a negative year. We softened the blow compared to a lot of different metrics out there. But also we delivered a positive quarter at the end of 2022,
Okay.
which was good, against a backdrop where bonds and equities were sort of doing things at the same time. Normally that relationship is bonds and equities behave differently, but they were sort of mirroring each other in 2022. Very unusual. Beginning of this year, the first quarter, we've seen that relationship go back to as it should be.
Okay.
Bonds and equities moving in different ways, which allowed our portfolio construction, the blending, to come through what is arguably a volatile first quarter. We produced positive returns across all of the investment ranges that we run.
Okay, and that feels like a bit of a surprise because you mentioned banking
Yeah.
crises earlier, and lots of noise in the press, as is their wont. So it's interesting to note that despite that kind of interquarter noise and turmoil, that actually investors left the quarter in a positive performance position.
Yeah, it's great to know that clients have had 6 months now of positive returns, albeit horrendous 2022,
Yeah.
combated, with the invasion of Ukraine as
Yeah.
well, which didn't help matters. But we're seeing a lot of green shoots now with inflation trending down, with employment softening, which is one of the key metrics for central banks to decide when to ease off the pedal for interest rate rises. And albeit we've had 2 positive quarters, we are very cognizant there are still risks out there.
Yeah.
So we're making sure that any decisions we make, it's not the right time to make any wide sweeping decisions away from the core. No extreme moves at this moment in time. So making sure we still maintain that level of appropriateness.
Okay, fantastic. And so looking forward, I know that one of the other things that you also talk about and execute within the asset allocation meeting is actually potential manager changes. So are you looking at introducing any new managers or instruments to implement your asset allocation decisions?
Yeah, it's again, Nick, great question. There's 2 key elements of the role within the investment team. It's finding the most appropriate investments and fund managers to deliver the returns needed for that particular asset class. The second element there is to make sure once you've found that blend, do they still exhibit and monitor those behaviours? Because what you don't want is a situation where one fund suddenly becomes a little bit more growthy, whereas we bought that to be a value component, and you want things to be doing different things at different times. So the investment team have been working really hard on finding substitutes to put on our reserve list. A few of those I think will probably be coming through over the next quarter.
Okay, fantastic. Listen, let's wrap that up there. Want to say thank you for watching, of course, and thank you for investing with us. If you haven't already got your Q1 2023 investment report in your inbox, you can find that on our website, alongside which is a veritable rich repository of other educational materials. We've got client guides, we've got full published holdings of where you were invested. So please do check those out. But for now, thank you for watching, and thank you to Mr. Shane Balkham.
Thank you, Nick. Thanks, everyone.
Thank you.